Good morning, everyone. This is Corey Hinkle with your daily All Eyes on AI update here at Ankerstar Wealth. This is the AI rally that we're in the market, and I just want to make sure to take a little time today, highlight all the current stories going on in the AI space. I'm going to compare and contrast them a little bit and kind of give you my thoughts on those, and just make sure our audience is up to date as possible on that. But first, I do need to remind everyone, this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are just mine alone. Okay, hopping over to CNBC. You can see the S&P 500 is down 1% today. Here we'll refresh. So yeah, just a clean 1% right there. This does follow a little weakness from yesterday. I think the S&P 500 is approaching about a 5% dip. So that is usually kind of a good thing when you're thinking about, hey, I'm got some money that's built up. I want to try to put that to work, and there are some places to do that. So all in all, a 5% correction is can kind of be a good thing, when it here and there. But let's talk AI. So first, we can't talk AI without NVIDIA. NVIDIA down about 3% today. This is still a $4.5 trillion company at this point, and just above $5 trillion. So there's not really any pain in NVIDIA shares at this point. Jensen Huang has teased this $500 billion in orders that is for 2025 and 2026. What this implies, and I'll show you in a moment, but according to their 2025 revenue, this does imply very healthy growth looking out into 2026. Now, this growth is slowing compared to some of those other growth rates, and I'll show you that in a minute. And it's just something investors are balancing. There's a lot priced into this stock. This is the heart and soul of the AI rally here. And so there's clearly some nerves here among investors heading into NVIDIA's earnings report tomorrow. So we'll keep you informed about what comes of that. And everyone is expecting a blowout quarter. You don't know though how the market is going to react. Is it going to be enough? After all, you got to be a pretty strong company, right, to carry around a $4.5 trillion market cap, or especially if you have hopes to carry a $6 or $7 trillion market cap valuation. You've got to have a lot of strength there, and so it'll be interesting to see how investors react. I'm going to look at those growth rates. You can see, this is really staggering stuff. This is why NVIDIA was a few $100 billion company, and it went to the biggest company in the world in just a couple of years. Look at these growth rates, right? 2022 revenue about 26 billion, 27 billion, then up to 61 in 2023, 130 in 2024, and now on a trailing 12-month basis, even though 2025 isn't over yet, you're looking at 165 billion. Again, you're seeing those growth rates slow down, but based on the kind of tip of the cap that Jensen Huang provided recently with that 500 billion or $500 billion number. So that's the NVIDIA portion of the AI rally. Let's jump over to this. This is new news today. Intuit signs a deal with OpenAI to pay $100 million a year for model access. Now, this is really pretty good news. You're looking at OpenAI. This is a company that is, they are really pressed here to grow revenue very quickly in 2026, 2027, 2028, to the tune of, they're going to need, let's just call it at least 200 billion a year in revenue by the end of this decade to really justify what's going on here. Now, I'm in no position to say whether that's possible or impossible. I'm just bringing you the news on this, right? But you see Intuit, that's one company signed a $100 million a year deal. That is a hefty price tag for Intuit to access these models, and that's good. This is what OpenAI needs. This is what OpenAI needs, and they're following through on that. Now, there's something else, though, not quite as good in the AI rally today. So we've had this Blue Owl Capital. Blue Owl Capital is an alternative investment asset manager. So what that means is they're really running some different private credit and private funds. And then, of course, they, as a company, are publicly traded. We can go to their website here. So if we go to what we do on their website, we go to credit. This is what's kind of, and if you hadn't noticed, year to date, Blue Owl Capital is down 42%. That doesn't look like an AI rally. So they're on the private credit side, and let's talk a little bit about how they're doing and kind of what implications may come of this. But they're using private credit to play in the AI development space. There's data centers and other investments, infrastructure-related investments that Blue Owl Capital is funding through their credit instruments that are, servicing the space. So why would the stock be down 42% this year? And does it even matter if they are? Well, why is it down? They haven't been able to generate returns on some of these private credit investments that they intended. And when performance lagged, a lot of their investors were like, hey, you know what? I want some redemptions. I want to get my money out of this private credit thing. And so many folks were wanting to get their money out that they've since blocked redemptions. So if you have money invested in this right now and you want it out, the answer is no. And that's something that investors really don't like, when they have made a decision like, hey, I'm done with this investment, I want to move on. And the answer is no, you're not done. We're withholding your money for the time being, and we'll notify you if and when that changes. So people get up, and when that happens, so you can imagine if you're an investor and your friend's an investor and you're high-fiving, things are going great here in this private credit space as it related to Blue Owl Capital only. Every time one of these private credit companies has an issue, they always say, oh, it's a one-off. It's a one-off. So fair enough, it could be a one-off. But your friend tells you, man, I tried to pull my money out. They said no. And if you're invested in it too, what are you thinking? What? No, I want to get my money out now, but the answer is no. So they've blocked redemptions. Now, they haven't blocked redemptions on all their funds, but they're merging one of these funds with another company, try to basket the losses together. And then, the investors will be realizing some of those losses. And then if they will next year supposedly be able to resume redemptions. Does that create a run on those redemptions? I mean, we'll have to see. But, some of these private credit AI development related investments are having some hiccups, we'll say. So, is it a one-off? I mean, kind of for now it is. Is it a sign of things to come? We don't know. We really don't know. I mean, look, we just saw Intuit sign a big deal, right? NVIDIA, Jensen announced revenue that was above and beyond what people expected, and this was very recent. They have earnings tomorrow. So it's not like we have a lot of clues that there's any concern there. I just want you to be aware of, the different things going on. And I've also told you multiple times, we're keying on this Oracle. Oracle signed the $300 billion deal here at $227 a share. The thing ripped about 40%, got to be about $1 trillion company there for a couple days, almost. It got very close, and it's since given it all back. This is a weekly chart here, so you can see it's given it all back, and it's still below that 227 right now, albeit just a tiny bit. So it's hovering below that level as investors try to figure out, is this $300 OpenAI deal real, or is it kind of, I don't know, speak. Is it talk or is it real, right? Is it talk or walk? Now, they are above the 200-day moving average here, which is an extremely good sign on a technical basis. So the stock itself is trading fine. Now, somebody bought it at 330. It's down at 217. They might not say it's fine, but again, just looking at it as an observer here, Quite a bit of volatility, but the stock is fine. You'd like to see it reclaim that OpenAI deal level to reassert confidence in the space. Now, here's some more confidence in the space going. Again, these are all things going on today. This is a fast-moving part of the market. Jeff Bezos launches a new AI startup, Project Prometheus, which will focus on developing AI for engineering and manufacturing in various fields. And they are having no problem raising money, some of it from Bezos himself, but from others as well. So, what does that say? I mean, investors are still lining up here, willing and able to provide capital when needed. And last one, I know there's a lot going on. Google CEO had some interesting quotes about the AI space in general, saying it's an extraordinary moment. There are elements of irrationality going on. And, he said no company would be immune if there was some unwind, right, of the AI hype cycle that we're in. I would just say on this, would a Google be affected? Of course they would, but Google would be fine. Would Amazon be affected? Of course they would, but they'd be fine. NVIDIA could be affected in a more substantial way, but NVIDIA would still be fine. They have a great balance sheet. They could have some near-term headwinds and things, but if you're holding the stock for 10 years or something, it's not like there's some collapse, right, where NVIDIA would go to zero. There's nothing like that going on. So an unwind would hurt these companies, that's why he says it wouldn't be immune. But it by no means would anything kill any of these companies. They're just not exposed enough. I mean, Google and Amazon have barely used any debt to do any of this stuff. So that's all we have for you today. The AI space is moving quickly. We'll see what tomorrow brings, and you might get another AI update tomorrow. I hope everyone has a great day and look forward to seeing you tomorrow.